Hi, my name is Jeff Merrick. I'm the Managing Director of Granite Loan Solutions, and this is another segment of our conversations with industry experts. And today I have with me Lee Jantz with NewView Financial Services. Lee, thank you very much for joining me.
Thank you for having me.
Absolutely. So why don't we start out, the goal of these conversations is to give our note investors, note buyers information that will be helpful to them during their process. Could you start out by maybe giving us some background on NewView Financial Services?
Sure. NewView Financial Services was actually a company launched a few years ago. It was born out of a business model around outreach, and one of the items most often overlooked by servicers, banks, private equity firms, what have you, was a lot of programs and products were being created, but that information or those programs weren't reaching out to the borrowers. So outreach centers or outreach companies were needed because they were a third party that were not threatening to the borrower. So there was no real secret sauce. It was just they didn't know who these people were, so those borrowers were more likely to pick up the phone or call or answer the phone, from a NewView Financial Services. So it started out with outreach, and then once the borrowers were located, obviously you can't initiate a program or a product unless you find the borrower. So when you find the borrower and then you negotiate with them, the clients that we had at the time were very, very HAMP, modification focused. So since the borrower was on the line and on the phone, it was easy for NewView Financial Services to convert that conversation into a modification program. And then as you know, the market kind of played itself out and HAFA was released. When HAMP either performed or didn't, if it continued to perform, it was easy to oversee the payment programs. And if for some reason the borrower started to default on those modification options, then short sales or HAFA program kicked in. So it was very easy for a company like NewView Financial Services to stick with a borrower, and it was not threatening to the borrower. The borrower perceived them to be on their side as well as serve the clients. And our clients were banks, servicers, firms, pool holders, note holders, entities much like yourself. So that's really how they started. That's how NewView Financial Services started, and then grew up to be kind of a full spectrum loss mitigator because they had to reach into so many consumers, and they had a large client base that owned or serviced notes or loans.
Fantastic. So I think historically I'm more familiar with using servicing companies. Mm-hmm. And I know that servicing companies I guess are kind of a jack of all, and they have to do everything from simple payment collections on a monthly basis all the way through. And in 2007, 2008, when the market started to change, mm-hmm. I think there was a real necessity for a group like yours. So it seems that kind of to put it in a nutshell or keep it real simple, it's a location mediation type group.
Correct.
That's right. Okay. So again, it's Granite's commitment, and I know NewView shares the same commitment mm-hmm. of helping homeowners across the country.
Absolutely.
Can you share with me how you work in conjunction with servicing groups?
Well, a little bit what you mentioned over the course of time, a lot of the servicing platforms have merged with others. Companies, banks have bought other companies, or pool holders have bought other notes. And these servicing platforms do end-to-end. So they do the payment collection, then all the way to REO, liquidation of an REO. When you look at that payment stream, if a borrower makes payments and defaults and then tries to recover, then can't recover, and then the asset has to be taken away and then liquidated, each of those sectors or components require a vendor or a partner. So NewView Financial Services allows that modularity to kind of plug in where that servicer needs. So some of our clients, some of our servicing clients will use us for outreach. Some of our servicing clients will use us for document preparation services or document review or underwriting. Some of our clients will use us for an agent network. So it's very easy for a NewView Financial Services or companies like them to kind of just plug in where the servicers need the help most based on whatever portfolio they're managing or they're overseeing, or if it's the GSE sponsored, or it's more of a traditional portfolio or privately held portfolio.
Very nice. And you know, what really is ringing to me right now is that the ability for a smaller investor or a small equity group who are buying notes and growing up through that process can really scale up and leverage themselves with a group like yours.
Yes, because to your point, the smaller investor holders or note holders, what have you, they don't have the back-end office, the back-end functionality. So to avoid cost or growing up something organically, which will take a long time in this market now that the market is moving, those pool holders or pool purchasers can partner with companies like ours or company like yours and say, well, how are we going to liquidate these assets? How are we going to manage these assets quickly? How can we get to market as long as we know what our targets are? So we allow them to do what they're good at, and they partner us to allow us to do what we're good at, that we've been kind of almost acquiring more finite expertise over the last 5-ish years. And then that partnership really helps kind of the smaller players.
And from what I've gathered through our company's relationships, there are other companies that you have strategic alignments with.
Yes.
That offer other services. Can you lightly touch base on what value that brings to note owners?
Well, NewView's parent has subsidiaries, kind of your sister companies that you're talking about, that really perform much like a full continuum lending servicer. So if you were thinking from a traditional servicing platform, there are the ability to do debt collection, you know, there are outreach services, and if that loan performs or you want it to perform, there's refinance or lending capabilities in a subsidiary. If it doesn't perform or the borrower wants to exit the asset, then there's liquidation, short sale, deed in lieu services, as well as post the bank taking the asset back, REO and technology firms that are part of the parent company as well. So it's best explained almost like a full continuum ecosystem for distressed debt or for distressed assets.
That's a great vision, great direction. So Lee, can you explain to me the type of clientele that you guys work with?
Well, we at NewView have been fortunate enough to have pretty key relationships in a lot of different arenas or areas within the industry. We have very small investors that take down anywhere from 50 to 100 assets, you know, per purchase, and they're private equity firms or small investment firms, all the way to the top 10 leading banks that have servicing portfolio. So in addition to that, we also have publicly traded entities that take down pools that we provide services for, and a lot of the size, company sizes in between. Probably the client that we have that not a lot of our competitors have are the mortgage insurance companies, and people or the industry often forget about them and the position or the ownership that they have in regards to all these distressed assets. So we have investment firms, we have banks, we have traditional servicing platforms, we have mortgage insurance companies, you know, and that's allowed us to learn and grow with their needs and to understand basically the market in general.
Can you explain to our audience how they might get a hold of NewView if they were looking for the services?
Well, they can either reach them through an investor such as yourself, or through, we have a website, NewView Financial Services, and there's an email option on there for business development, and we are obligated to respond to any inquiry within 24 hours.
Fantastic. Well, thank you again for taking your time with us. I think that your group of companies is bringing a lot of value to the current marketplace, and we're excited to be a partner with you, and we look forward to a long-standing relationship.
We are too. Thank you very much.
Thank you.